Hello and welcome back to another session of the Let's Get Technical series. I'm Kavita Agrawal, the founder of EXP-Invest, and we are here today to dissect the charts of NELCO. Why NELCO specifically? Two reasons. Number one, we've done similar sessions on Alchem and Latent View recently, and the response that I received from all of you was amazing. I picked up NELCO where we had 3 consecutive successful trade setups. Not just that, there's a gift for you in this session. We will discuss a trade setup that I have identified in NELCO just few days back from my premium members. But in this session, I will be sharing that openly with everybody to participate. As we begin, I'm going to share my chart and I'll drop the link to my Telegram channel if you wish to receive the stock template. Don't miss this chance. This is the chart of NELCO. Now you can see the 3 trades are marked here, but before we look at these markings, let's look at the active call database, which represents a more precise history. The stock of NELCO, 3 trades were done. The first was taken in the month of May. Then we went in for another trade in July and then in August. 5th of May, right here at this white pin. Let me make it bigger so you can see it. Then the second is 11th of July, which is right here. Let's make it a little bigger. And then 14th of August, which is right here, the 14th of August. Now, how did the exit happen? On the 5th of May, trade was exited on the 6th of June. Then we had the 11th July trade exited in just 3 days on the 14th of July right there. And then this 14th August trade got exited on the 12th of September. If you look at the return profile, you can see the first trade was booked with somewhere around 12 to 2% profits. The second one booked around 16.5% profit. The third one booked around 9% profits. And you can see how long it took, 31 days, 2 days, and again around a month of holding. The purpose of having this discussion is that you can get a first-hand account of what it takes to be a good swing trader. Let's get started. If you look at the larger time frame on this of the 75-minute, what you will see is that when this primary uptrend was unfolding, this primary uptrend is what we traded. And while this entire uptrend from bottom to top was around 78% rally in 165 days, we captured 15, I'll just round it off if you don't mind, 15 plus, there you go, 15 plus 16 plus 9, around 40% upside with a capital commitment over how many days? 31 plus 2 plus 31, 64 days, where the stock rallied around 70 or 80% in 165 days, which is a little above 5.5 months. We kept our capital engaged for 64 days in this entire upside and made around 40% returns. Let's now see how did we go about identifying firstly that a fresh leg of upside was beginning, and then how did we go about executing it. And mind you, this is not the first time that we've traded NELCO. If you look at the past, you will see a lot more white pins. All of these white and yellow pins show you where we participated, where I gave recommendations to my Trade Together program members or my swing trading plan members and how they profited. We have to begin our analysis from the top, from the weekly time frame. Why? Because we need to first identify the direction of the prime. When you do swing trading, there is a very important concept called eclipse. You want your weekly time frame, your daily time frame, your 75-minute time frame, your 15-minute time frame, if possible even your 3-minute time frame, to all tell you the same story, that the stock is bullish. In this, if you look at the weekly time frame, if it is bearish, if daily is bearish, but 75 and 15 are bullish, what is going to happen is that the output from the weekly and the daily time frame, it might trump the moves on the 15 and 75-minute time frame. At the same time, if you see bullishness on the weekly and the daily time frame, the 75 and the 15-minute time frame, it says bearish, then your risk-reward ratio can increase significantly. Because there's 2 things that we're trying to do here. Number 1, we want precise entry. Number 2, we don't want to take a lot of risk for that. In order to reduce our risk, reduce our potential stop loss versus the target, to keep a very attractive risk-reward ratio, high risk-reward ratio, we want to make sure our average cost is as little as possible. The best way to do that is first identify a strong bull trend. Within that bull trend, identify a very good entry point using the decision-making time frame. And that decision is backed by the analysis on the 15 and the daily time frame. And the starting point of that analysis is actually the weekly time frame. If the weekly time frame tells me that I am bottoming out, or I am in a strong uptrend, or I've just taken a dip from a strong uptrend, given some correction, but I'm ready to resume, then I'm going to quickly go into my lower time frames and look for more information. The weekly time frame, if you see, look at my trend lines, the slope of my trend line. All my trend lines are parallel because I use the cloning method to draw my trend lines. You can see it's all trending upward, which means that the underlying trend is very bullish. There is some little bit of concern, that is on the weekly time frame, there is a small negative divergence. That is number 1. And number 2, NELCO has taken 2 resistance from this trend line that we can see. These are the 2 points that are a little bit concerning, but the fact that past this negative divergence, we have approached the level of 30 and gone up from there, that is a positive. this upside is what we have actually captured. This negative divergence came here, which meant because of the negative divergence, any time in this wave, it was not a good time to enter. What I had done was, because NELCO is a stock which is part of my watch list, I had an alert set at the level of 30 on the weekly time frame of NELCO. So you can see that this particular low ended right here at this blue faded line. What is this blue faded line? It is the 200 EMA of the weekly time frame, visible on the daily time frame, because that is how I have set it up. This alert went off, and what I saw was on the daily time frame, a positive divergence had emerged. Now, this positive divergence has emerged after a pretty sharp correction, which means a correction of 54%. As a swing trader who tries to cap her losses at 5% max, making a fresh entry here could be quite risky. What I did was I waited for the price to forge a higher high. The first higher high was forged at this point on 27th of April. Then I waited for the stock to take a dip. Let's go on the 75-minute time frame now. What I could see was when this higher high got forged, first of all, the 500 EMA of the 75-minute time frame got breached, and the RSI of the 75-minute time frame officially went into what I call the RSI bullish range. You can see here, when the price was falling, the RSI was oscillating between the range of 60 on resistance to 30 minus. But when the momentum became very bullish, the was shy of coming below the level of 40, and on the upside, it started reaching the level of 70 and sustaining above it consistently. Interesting thing to note here is that this high that you see is almost at the same level as this high, but look at how low the RSI is versus the next one. That is our indication that an underlying trend shift has happened. The momentum has shifted to bullish range. There is a high probability that a new bull range, a new bull trend is going to begin here. That is why a recommendation to buy the stock was given to the members on the 5th of May. In this stock, we started accumulating a position. You can see these green dots, which suggest that the position was being accumulated. And then what happened? After a sideways consolidation of almost a month, after 30 days of no movement, there was one fine day when the stock just moved so sharply that it went ahead and it achieved the target. The first, you can see this green zone. These green zones are used, these rectangle tools are used to mark the support and resistance on the chart. This green zone was my first target here, and you can see that in one sharp move, the stock achieved that target immediately. Here, there was no stop loss revision, no active management of the position. It was pure entry, hold, and exit. We did use the GTT orders because we don't want to be enslaved by the market, in the sense that we don't want to have to look at the market all the time. We use GTT orders on the Zerodha accounts to set our stop loss and targets. One point about that is make sure you have your DDPI activated, because if you don't have your DDPI activated, then what's going to happen is that your stop losses are not going to trigger, even if your price comes. If CDSL authorization is not done, your order simply is going to get cancelled. This was the first opportunity. This position got exited. The stock went into consolidation. It was very evident that bearish activity was not unfolding here. Moreover, if you look at the 15-minute time frame, the 15-minute time frame had clearly moved into the bull range. So this bear range and bull range, it doesn't pop out to you until you start seeing them. And you need to train your eyes to identify RSI bullish range and RSI bearish range on the chart. After booking this position on the 6th of June, we waited for the stock to give us the next entry signal. The next entry signal was expected on the 15-minute time frame. I had an alert set for the RSI on the 15-minute time frame to visit the level of 40. Every time it came to 40, I would come back to my charts and I would see whether it was a good time to enter or not. The problem with this alert method is that when the time to act is coming closer, the frequency of the alert increases, and every single alert is not going to be useful. What I have seen is that out of all the alerts that I set, only 20% of the alerts are useful. The rest percent of the alerts are absolutely wasted because it's either too soon or too late. But even getting 20% chance in my favor is amazing to me. That is the reason why I heavily depend on the alerts through TradingView. What I saw was that the stock was, first of all, very close to this green zone. This green zone initially was a resistance. That is why we had a target there. But there's a concept of fungibility in technical analysis. That is, once a resistance is breached, it becomes your support. Once a support is breached, it becomes your resistance. Depending on whether the price is above an important price zone or below the price zone, we give it names like support and resistance. Ultimately, the purpose is the same of these participation zones or green zones that I draw. They obstruct the path of price. What I saw was that the price was very shy of coming below this zone. And the third time that it approached here, you will see this gray line. Pay attention to this gray line. It plays a very important part. I'm going to make it more evident. You can see how the price just waited to fill this gap between this. This is the 500 EMA of the 15-minute time frame. Remember, in technical analysis, when you use moving averages, you need to use moving averages across different time frames. In my analysis, the 200 and the 500 EMA are the most important because I have seen that whenever a bottom is forged, On some time frame or the other, the 200 or the 500 EMA is playing a role. I have them mapped across all my time frames and I have them superimposed across my time frames. So this support level has been an important entry point in the past. The reason why I did not give the buy call say at this point was that I needed one more thing in favor of my investment case or in favor of my trade setup. This EMA acted as a support. It was one more point that was in favor of my trade setup. The underlying trend is bullish on weekly. The stock has been in consolidation and respecting the support level. The minute is an RSI bull range. The 75-minute is an RSI bull range. And the 500 EMA gives support to the price. This is where we entered. This was the point when the stock finally created a nice higher high. Now, with this happening, the moment we entered, this was really amazing. Like I gave the recommendation to my members on the 11th of July in the morning, and on the same day, the stock moved up very sharply. The next day, the stock moved up, and then we trade our stop loss to the point of the recent low here when the stock took a little bit of a correction and came to revisit the 50 EMA on the 15-minute time frame. There, the stop loss got triggered. And as a result of that, we ended the position with around 7% profit in around 2 to 3 days. The next setup happened when again, the price came to revisit the 200 EMA of the 75-minute time frame. Okay, remember this was a 15-minute time frame, but the moving average setting on this is 1000. Why 1000? Because 200 multiplied by 5 is 1000. 200 EMA on the 15-minute time frame. If you want the 200 of the 75-minute time frame to reflect on the 15-minute time frame, you simply have to multiply it by 5. The price started correcting. The 500 EMA this time did not give a lot of support. And why did we have the conviction that this particular support on the 500 EMA was not going to act in our favor? Because the RSI told us. You can see how the RSI has now moved to the bearish range after giving a negative divergence. Here we got until this point, we could see that the negative divergence was playing out. Now, when the 500 EMA gets breached on say the minute time frame or the 75-minute time frame, then you need to look for the next best support. If the 500 EMA of the 15-minute time frame got breached here, the next best support is the 200 EMA of the 75-minute time frame, which is already visible on the chart thanks to the technique of superimposition. We got the support here, and let's look at the 75-minute time frame. On the 75-minute time frame, what you can see is the price has again come back down to the level of 40. See, the 15-minute time frame here turned bearish at this point. I'll tell you exactly where it turned bearish. When it broke this is exactly where it gave us the signal that I am not going up any further. 15-minute time frame turned bearish. But if you look at the 75-minute time frame, the RSI is still way above the level of 70. Means what this indicates is that on the 75-minute time frame, even though there is bullishness, we can expect a correction to come in. Now, when we do swing trading, we are trying to optimize. We want our capital to perform to the best of its ability in the least amount of time. When we can see that a stock which is underlying bullish is going to go into an intermittent correction, I preferably would not like to let my cash sit there, do nothing. Instead, if I have another stock where there is good opportunity, I would like to divert my cash there or at least hold cash in case I get an opportunity which requires me to act fast. I'm going to do that. At this point of time, again, we made the entry because we knew firstly that the underlying trend is very strong. The 75-minute is very strong, weekly strong, daily strong. 15 is in correction, but 15 within the correction has already taken 3 or 4 supports on the 30 level. There is a limit to how much support it can go. If the underlying trend is bullish, then the chart is not going to stay bearish forever. It has to start giving positive returns. When the 200 EMA and 200 EMA, like I said, 200 EMA and 500 EMA are very strong support. When this happened, this was my cue to give the buy entry again. We entered the stock again and then we held it. Soon enough, the rally started. We started scaling our position. Now, setup gives us the opportunity to discuss how we trade our stop loss on this. When we entered the stock, right here, we had to identify a probable stop loss level. And you can see that we entered right after this little spike. This little spike became our first stop loss level. Then we had to identify the first resistance level beyond which if the price went, we would change our stop loss. This became that level. Now, when the price reached this very level here, we can see it finally reached it, but it came down. But when it reached, this was a cue to change the stop loss. Where do we want to change the stop loss? Initially, when a position is very new, we don't want to be aggressive. We want to give the stock breathing room when it is especially coming out of a fresh correction. If we keep the stop loss too tight, there is a chance that it might get out. When this was breached, we simply bought a stop loss back to break even. Why break even here? Because again, we don't want to leave our capital exposed to the market fluctuation. Once this break even was identified and the stop loss was revised, it was time for us to identify the next resistance level. If the price is here and is taking a dip, the next resistance level has to come from somewhere here. This becomes a good resistance level for us. Now, again, the price moved down from here, up here, and it broke our resistance zone twice, which means it is already created a higher high. If it's created a higher high and breached a resistance, it's time to revise stop loss again. Let's bring this stop loss up. Where do we bring it? To the previous low. This becomes our next stop loss. Now the price starts doing its thing again. We need to identify the next resistance zone. Naturally, the very previous resistance becomes the next resistance that we need to look out for. And here we have gotten that resistance over here. Where do we put a stop loss? The next low becomes our stop loss, somewhere over here. You see how this technique saved us from getting stopped out by just a few points over here. Once the resistance, you can see after this resistance got breached, the price moved up, but it almost came down to the stop loss. This kind of correction is common in stocks, and this is what we want to avoid. We don't want to get stopped out at this stage. That is why we use this technique of trailing stop loss, where we identify the next support, next resistance, next support, next resistance. It takes a little bit of practice. You have to be very tactical, and it's a little mind-bending. It's frustrating, but it's totally worth it. This, again, we saw this particular resistance that we had identified, right? It got breached at this point, which meant it was time for us to identify the next resistance and revise our stop loss. This resistance got identified there, and that means our stop loss is now coming and getting placed at the recent low, which was actually very close to the price. You see here how the stop loss suddenly is very tight. It's a mere 2% stop loss. Earlier, what was the stop loss level? When we changed the stop loss at this point, the stop loss was 2.5%. You will see as the price starts catching momentum, the aggressiveness with which we change our stop loss naturally changes, because now the price is in momentum and you have more at stake. You don't want to lose a lot of your upside. Ultimately, we see this big spike, but this was the resistance that I was looking out for. What happened here was the price went up pretty sharply. If I do a calculation, it's nearly 6%. But then because I waited for this alert to get triggered, I did not see the charts, and the stock soon enough fell back around 6% to give up all of that rally. Now, my stop loss level here, because I saw the sharp correction come down, I changed my stop loss to below the previous resistance zone. This point got saved because I could see the stock was coming back down to the 500 EMA. I took a little bit of a analyst call, you can say, and revised my stop loss slightly lower, just below the gap. I'm not sure if you can see, but there is a gap here. I was like, okay, if the price comes back to fill this gap up, then I'm going to get out, because that would mean that the 500 EMA got breached. Luckily, the 500 EMA came through. Now I identified my stop loss, my next resistance level as this high, the high that we had here. Next resistance. You see the price took resistance here and it started to go up. The reason why I didn't exit here was because I could see that the bullish range was still being maintained by the 50-minute time frame. Okay. My stop loss had no reason to be revised again, because the resistance was not essentially breached yet. Then finally the resistance did get breached somewhere here. Then we changed the stop loss to the next previous low, which was again this low. Now again we had to change our resistance zone. This resistance was set on the basis of the high of this candle right here. Then again, we saw resistance happening here, and then this little spike, which meant that a higher high has been forged on the price, evidently, but the RSI minute started to give a negative divergence. Now I knew that the time to exit the position was probably very close. I set my stop loss for the last time near the very low of this market spike. And soon enough, as the price crashed, the stop loss was taken out. On the same day that the stop loss got taken out, the stock fell 4.5%. This trade setup is a more, I would say, value-adding trade setup for you, because I have tried to share a lot of knowledge nuggets, which I hope you will appreciate. If you do, please don't forget to give a thumbs up to this live session. But now let's come to the more recent price activity, and let's see if NELCO is trying to give us another opportunity to go long. On this 15-minute time frame itself, if you see, the RSI of the 15-minute time frame has moved into the bullish range on the 26th of December. The chart of NELCO, the RSI came back on the level of 30, which was my time to start looking at the stock. What we can see here is that NELCO is still very strong in the bullish range as per the 75-minute and the 50-minute time frame. If you look at the volume profile, is extremely strong. Whenever the price goes up, the volume goes up, which is very good which is a very good indication of underlying momentum. Going back to the daily time frame, what I can see is the daily time frame has recently taken support at the level of 30 and is starting to go up. Now, I know that NELCO is still taking resistance at the level of 60 on the daily time frame, which is a little concerning considering this negative divergence that was given. But I did an analysis of the overall sector, and I think this sector is ready to start moving up again after a short period of lull activity. The stop loss is the most recent low that was forged. The level of 770 to 776 is a stop loss, and the expected target is the previous resistance on the daily time frame, which is at the level of 967. For this trade setup, I am recommending a stop loss of around 3% from current market price and an upside of around 21%. That's a risk reward ratio of almost 7 for you. Now, if you want all of this information, the entire trade setup with the risk reward ratio, then I suggest you join the Telegram channel, the link for which has been shared by me in the comments right now. With that, I have come to the end of this session. On Friday, we will do the market outlook where I will discuss with you the Nifty, the Bank Nifty, and the intersector chart analysis because we want to know where the momentum is headed. We can take our money there. Thank you so much for joining today's session. I hope you've learned something new and I was able to add value to you. If I did, do join my Telegram channel and give a thumbs up to this session and share it with your friends. Now again, thank you so much for joining in and namaste.